Hello, I'm Guillaume Prache. I'm Managing Director of the European Federation of Investors and Other Financial Services Users. I'd like first to thank QED for inviting me, because it's not always that when you have events on investor protection that you do give the floor to the investors. I'm thankful for that. I also should disclose that I am chairing the ESMA Securities and Markets Stakeholder Group, but just to mention that, of course, I will not speak in this quality, although I may refer to the work and experience of this stakeholder group. I share a lot of the statements made by MEP Ole Schmidt. One where I'm not entirely in agreement is on the MiFID 1 being a success, although I would agree with him, it's more on the implementation side than on the regulation itself. But the Commission itself, if you look at page 2 of the MiFID and MiFIR proposals, says that the benefit of MiFID have not always been passed on to the end investors. And it also says that the complexity induced by market fragmentation has increased very much. This is only one sentence. We would have, of course, liked to get more on how, where, and why the benefits have not been passed on to retail investors. As I think Ole Schmidt and Lindsay as well said, it is a very crucial question. I know I'm addressing mostly the financial industry people. I agree with Ole Schmidt. We need a very strong and very competitive financial industry in Europe, not only for jobs, etc., a strong economy, but for the investors themselves. We need a competitive product offering. But you have to realize that the financial crisis is your doing and is the doing of the supervision, and that's recognized by the European authorities since 2009. So we really need to address things as candidly as possible. Very shortly, because I have 10 minutes, I think, on investor protection in MiFID. So we have several issues. First, as again recognized by the Commission, the increased complexity, opacity of equity markets, and the lack of consolidated equity trade data, we heard about this, are induced by this market fragmentation, and investors are suffering from it, especially individual investors who do not have the means and resources, for example, to pay for what Nick calls an expensive service, which is data consolidation. Before MiFID, it was free for us, because the data, you didn't need to consolidate data because you had not fragmented markets. That's one example. As the Commission also recognizes, there is no significant reduction of transaction costs for individual investors. There is no evidence of that. I'm talking again about individual investors. There is, I think, a failure of the best execution rule in MiFID, especially on the price. I know it's not the only aspect of best execution, but we have conducted research in partnering with an investment firm, and it shows that in up to 17% of cases, individual investors do not get the best price. And in the end, that's a very big disadvantage. In fixed income markets, it's worse. So I heard you have to be very cautious about the transparency in bond markets. Evidence shows in 2008 that the less transparent markets, the fixed income markets, were also the ones that collapsed and did not provide any liquidity, whereas the equity markets, although they are more risky, more long-term products, they were the only ones which were still liquid and where investors and issuers could still transact. Unfortunately, MiFID II proposals, I think, are not going to change this trend. Individual investors, for the last decades, have been pushed out of the capital markets. 50 years ago, we represented roughly 50% of the capital markets, especially the equity markets. There are more solid data on this in the US than in Europe, but roughly I think that's correct. Nowadays it's more like 10%. And MiFID has increased this trend. For example, this markets fragmentation, you have to understand that MTFs, for example, this is Chinese for the retail investor. You know, they have no clue what it is, and they have absolutely no direct access to them if they first understood what it is and wanted to access them. So the creation of yet another market venue, the OTF, we don't think that's the right solution, especially when the Commission realizes and recognizes that there's already increased complexity in the markets. Although it does mean good, it means we should reduce the part of dark pools and of OTC trading to get better transparency, but we don't think that's the way to do it. Consolidated tape, let's be clear. I think you know there were 3 options proposed by the Commission in the consultation, and they retained the one where I will bet with you, I think for years we'll still not have, we individual investors, a consolidated tape. I mean an accessible one for individual investors, free. You know, before MiFID it was free. You know, I could go on my retail broker screen, I could get pre-trade and post-trade information, best bids, best offers, and the last transactions. Of course, today I can get, there are exceptions, but roughly for most retail investors, I get only this for the regulated market piece, nothing else. I'm just summarizing. There are exceptions, and there are some retail brokers who are subscribing to services to try to get some consolidated data. Lastly, as I said, I see also in MiFID II how we are going to tackle this problem of best execution, especially in terms of prices for retail investors, and that's a serious problem as well. Of course, there is also, I should talk about one small article in MiFID, which I think is the most spoken about. It's Article 24 on the famous, now it's called independent versus dependent advice, and that's the whole debate about inducements. So, of course, we have the example of the UK, the RDR, where they will ban commissions. Another minute on inducements, that's fine. Very shortly, ideally, in principle, yes, banning commission, then you don't have any more conflict of interest. That's not what we are proposing, because I think in continental Europe, the distribution model, first, is a bit different from the UK. Second, I'm not sure you will be able to track commissions through the banking conglomerates. And in continental Europe, many of the big asset management companies and insurance companies that deliver retail products are 100% affiliates of banks. So that's going to be difficult. Also, you need to rethink the product offering, you know, maybe much more simpler products on the one side, and advice products where you pay for advice and that they are more sophisticated. So we have 2 proposals. In fact, one I think is directly in line with, I was privileged because Ole Schmidt was very concise and brief in his speech, but we got some notes from you in advance. And on advice, you are saying, I am quoting, wouldn't it be better not to have investment advice services if they are affected by strong conflicts of interest? Advisors often end up being the distribution channel of the fund managers rather than an additional investment advice service. I could not agree more, and our first proposal is to call a cat a cat. You know, I've never seen, as I often say, a car dealer labeling himself transportation advisor. So why, for proposals which are much more difficult to apprehend for the customer, you would call yourself financial advisor when you are simply a marketing and sales person? So our first proposal, I'll finish on that, I have 2 proposals. The first proposal for MiFID II is to ban the labeling of advisor for salespeople, full stop. And that will be a psychological shock in itself for retail clients. You know, you always know people who say, I'm going to see my advisor like if they are going to see their doctor. But they pay the doctor, they don't pay the advisor, okay? So it's not an advisor. Let's call a cat, first proposal. Second proposal is, I'm not for over-regulation like Ole Schmidt. If MiFID I was implemented, I think we would have also a solution, because MiFID I implementation directive article 26 is already very tough on inducements. It bans inducements if they are not in the primary interest of the client. The problem is it's not implemented. And even CISA, in its consumer guide to MiFID, that you all read, not one word on inducements. So it was not implemented. Thank you.